Make yourself comfortable in the front. If you're outside, come in and grab a seat for this final panel discussion. And it's going to be something really interesting. Now, the topic is, for our closing session, Fintech shows promise but needs new monetization strategies. And of course, to tell us more about all of this, we'd like to invite our panelists on stage, starting with Claudia Kolonas, founder of Pluang. We also have Gavin Guo, CFO Yup. We're also pleased to have Pratyush, Prasanna, Group CEO Flip. And Dino, Setiawan, CEO AwanTunai. And of course, it's almost a tradition these days to have this gentleman close us off. Let's welcome the founder and partner, Cento Ventures, Dmitry Levit.
Hello, guys.
Oh, yeah.
We meet again. Right. Thank you for staying with us. Last panel of the day. Traditionally, we make it fun. And for that, we bring the operators on stage. Thank you, guys. Let me first introduce myself briefly. My name is Dmitry. I'm with Cento Ventures. We're a smallish but punchy fintech expert based out of Singapore, occasionally visiting Indonesia to check what's going on. And I would like to start our panel by asking my panelists to give us a long-form introduction of themselves. Everybody here knows you. You guys are quite visible founders. But it is quite hard to understand these days what each particular fintech firm is doing. Complexity is quite high. So I would like to ask you, starting with Claudia, to give a breakdown of how should our audience think about your business? So what is it you do in a little bit of detail so it's easier to follow the rest of the panel?
Okay. The easiest way to describe us is we're the Robin Hood of Indonesia. So we have everything from US stocks, with crypto exchange, US stock options, crypto derivatives that just launched, and mutual funds and soon to be Indonesian stocks. So really everything in one platform, super app for wealth products.
Yeah, and the easy way to, so we are Yup. The easiest way for describing us is we want to be the new bank in Indonesia. So what we do is we issuing credit cards. That's including both the virtual credit cards and also the physical cards directly to consumers, to the working class people. And we want to be the one offering their first credit cards in the market.
Do you mind unpacking a little bit for those who don't know? What is a new bank?
New bank is, they started off doing credit card business in Brazil. And later on, they become this full-blown banking. They are actually, I think, the leading digital bank in the entire Latin America at the moment. I think lastly, when I saw they were listed in NYSE, and lastly, when I saw them, their valuation goes to 70 or even $80 billion. So we're just trying our best to emulate their success.
Thank you. Pratyush?
Thank you. So I'm from Flip. Flip, in terms of what we are today, is we are the one-stop fintech for you, whether you are a customer or a business. Now, what does that mean? Anything that you want to do with your money, which is payments, growing your money, or just keeping your money in your bank, or moving the money, is what we help you on the consumer side. Similarly, on the business side, we do similar stuff for businesses, which is accepting payments, giving payments, wherever you're online or offline. That's what we do. Almost like, I hate the word super app, having worked at Gojek earlier, but we are like the super app for consumers and B2B.
It's all right. Most of us have been there. You're a super app for financial products. Dino.
So, AwanTunai. We have one single loan product in one single industrial vertical in one country. AwanTunai is hyper focused on becoming the king of FMCG lending. So what we do is we provide inventory purchase financing. Think of it as purchase order financing, be it for the tiny warungs, the wholesalers, as well as all the way up to distributors. That's corporate banking, SME lending, and micro lending, but in one single industrial vertical, and we only focus on the traditional segment, which happens to be, unfortunately, the majority of that supply chain, just because people can't afford to buy in supermarkets and modern convenience stores. And our claim to fame is we've managed to get unsecured SME credit to perform at better than bank-secured NPL rates. And I can tell you more about later how we do it.
And I would love to hear that. So let's start with that. So I'd say probably most of the audience has already heard everything about the Great Reset, the difficulty of obtaining funding, the stingy investors who no longer want to invest. So I think everybody who lasted this long is already persuaded that monetization is the flavor of the month, possibly a year, possibly next half a decade. So today's panel will be entirely dedicated to how the real operators on the ground in Indonesia think about monetization and sustainable long-term monetization of that. So my first question to the panel, and I would love each one of you to give an answer, is how do you optimize for the long-term monetization? And very, very importantly, what do you choose not to do? What are the key trade-offs you face, and what do you choose to abandon for the sake of your monetization? Dino, you volunteered, so let's start with you now and walk the other way.
Got it. AwanTunai grew in a fairly contrarian manner. Right? It wasn't growth at any cost to start off with. In fact, we were fairly unpopular with the VCs because they didn't...
Don't look at me.
You didn't invest.
True.
Now, so it took us 2 years to figure out the risk innovation. Right? For 2 years, we kept our loan book below $1 million US. And where did that innovation come from? So in 2 years, our conclusion was that the publicly available data in Indonesia simply couldn't support low NPL lending because our vision was always to do very low-cost lending to the micro SMEs. The breakthrough really came through in 2019 for us, where we started capturing ERP data at the wholesalers and distributors within the supply chain. This is high-quality data that we can reconcile to bank statements. And if you think of it, at a layman's level, the correlation of what a warung would buy every single day in inventory is highly correlated to the performance of that warung as a business, as opposed to telco data, social media data, or whatever other kind of big data metrics that are out there. And to give you a sense of the difference, pre this data, when we're using telco data, social media data, our NPL loss rates was 60% per annum. Right? On 1 month tenor, that means 5% per month loss. But we had fintech lenders lending at 20, 30, 60% per month. Right? So you can make money by charging very high interest rates. For us, we make money at charging less than 2% per month. And that came through in 2019, where our NPL rate dropped to around 3%, from 60% to 3% due to the quality of this data. And that allowed us to really build a strong monetization model. We had a foundation to build upon, which I think when you just grow too fast too early, you don't get a chance. It took us 2 years to figure that out.
So let me try to understand. What you chose not to do was you chose not to charge extra high interest rate, and instead you chose to stay mildly or seriously unprofitable for several years. I'll have to get back to you on how you managed your stakeholders in that. This will be one of the questions coming up, but over to you.
I'll answer it at a slightly more fundamental level, right? And then I'll go to Flip. I think as long as, and this is common sense, right? As long as you do what is right for your customers, you will be able to monetize, right? Very fundamental level. However, unfortunately, it's not the right thing to say in Indonesia, but for those of you who drink, you know that you get a hangover when you drink a lot, not when you have 2 glasses of wine, right? Unfortunately, a lot of us got drunk with the free flow of money and with the pressure to grow 10x every year. Most importantly, I personally believe, again, this is a PEVC summit, but I think if you're true to your customers rather than to pressures from people who have put in money, you will always be doing the right thing in terms of growth. As Dino was mentioning, The whole idea is, are we building a product which is relevant for customers for which they will pay, right? Now coming back to Flip, one of the first things that I did when I came in, which also had been kicked off, was that let's identify where customers will use this on a regular basis and will pay us, and we will do only that. Let's finish the distractions around number of users, number of merchants, etc. What brings us revenue, and more importantly, customers will regularly use yourself, right? We got our customer retention rates from about 50% to about 90% in 1 year. Our merchants generally are from other PGs because we came late, but they generally never leave us because our quality of service, our acceptance rates, and our downtimes are much lower, are higher or lower, depending on one of those, right? So I think at a fundamental level, as Dino was mentioning, if we are true to what we are building for our customers, you will figure out ways to monetize. We are still not profitable yet, unlike you, but we have reduced our burn by almost 60%. So that's the way I look at the businesses. Low and grow rather than grow breakneck into something that could be dangerous or hangover causing.
So what would be that sacrifice you made? Growth rate?
No, I think the sacrifice is in terms of unviable businesses, because it's very easy to get distracted with shiny objects. Don't do that. Don't do what?
So the super app aspect of the super app, the multitude of other services had to go.
Correct.
To let it be.
Multitude of services so that you can just focus on, what is right for the customer and then make money.
Allow me to park a small disagreement that we'll unpack later, to the point of when you do right by your customers, the profitability will come. Look, I love Grab product. I didn't always, but I love it now. And I love Gojek product. And they're doing the right thing by me. Don't think they made a single dollar of profit yet. Not in correct accounting term anyway. So let's argue about this a little bit more. Sacrifices made on the way to profitability, and what do you choose not to do, and what do you focus on to drive that monetization, not profitability?
Right. So when we're thinking about this question, right, so as a payment tool, down its core, we want to be very customer-centric. So when we think about, like, in the long term, and also how we should be sacrificing, and how should we be making the decision, right, it's always customer-centric. We want to offer a product where customers use it frequently, and they find this product very, very extremely convenient when using, right? Often, just to answer your question, oftentimes we see when we offer this credit card to the users, we can charge higher, right? And in the short term, they wouldn't even feel the difference. But in the long term, every time when we're thinking about how we're pricing the deal, we're always thinking about how the customer, how their frequency, how they would be thinking our product. So to answer your question, the sacrificing we make, very similar to what Dino just mentioned, we sacrifice the price.
Sacrifice
the pricing, the price. So we want them to feel more incentivized to use it, to feel more convenient of our product instead of like the pricing.
That is a sacrifice that leads to addictive behaviors. So that gives you traction and that gives you retention. But does that actually drive monetization in the long run?
It will ultimately drive monetization as well. For example, like we can ultimately getting monetization from other places if their frequency goes up. But just from the short term, we're actually sacrificing monetization.
Claudia.
Yeah, so we have a US investor, right? And he was founder, he's been in, in the VC space for 30 years. And I remembered when he first invested, one of the things he said is, I know you've raised a lot of money, and this is going to be so counterintuitive, but you've got to cut your marketing spend. And that was so difficult, because I remembered at the time where every single board member was like, hey, your payback period is X, less than 5 years, just increase spend and et cetera, right? So the past 2 years with the whole hangover, we dropped our marketing spend by over 80%. And it was a huge challenge at first, huge challenge, because basically as Pratyush mentioned, you're basically drunk on alcohol, basically, of just spending, marketing, and growing, right? But we've come to learn that my team had to work together to actually improve the product. And that is the crazy thing, product-led growth, right? It sounds so simple, and in the US, this is, they're like, I think this one VC told me, like, yeah, this is actually how people do it in the US. It's called product-led growth. And, I think that was a huge challenge, and I think our product, as a result of cutting marketing spend that much over the last 2 years, actually have completely evolved. Not only, obviously, if we've become EBITDA positive, whatever it is, that's great, but fundamentally, it's like we don't need to spend money, and we quadrupled our business last year in revenue, AUM, everything. So I think just being able to have the confidence that, hey, you know what, your product is really good. If you look at the data, Robinhood, 70, and like if you look at TransferWise, Robinhood, et cetera, 70% of their users come from referrals, right? And one of the things he said was like, if your product as a consumer business is not showing that kind of referrals, then you don't have product-led growth. And that's the truth. And that was so difficult to actually, to be honest, get yourself like less addicted to the marketing, like kind of like drug, if that makes sense.
I am so sorry for what I'm about to say next, but I was just taking a bike ride through Jakarta last night, and I saw a gigantic outdoors advertising unit for Pluang in front of Plaza Indonesia. Are you sure you're sacrificing marketing budgets?
Yes. But like profitable marketing, right? It's not like I'm saying no marketing. I'm saying that, hey, payback periods need to be less than 3 months. Everybody in my team knows this. If it's not less than 3 months, we won't do it. And we track everything, right? And that is discipline.
Fair enough. Staying on macro topic for a bit before getting into, by the way, it's really hard to get fintech people to be fun on stage. You should see them in the back room. Boisterous stories, materializing money out of thin air, stories of fraud. On stage, all regulated professionals, so difficult, but we'll get to them. Probably another macro question, which is, quite a few folks at this conference are now driving the narrative that, Indonesian market, we always thought about it as a very large market, but it's actually not. It's just another Thailand, give or take. I would know I'm the one driving this narrative mostly. So when investors come after you and say, look, let's forget about the 280 million population, it's sort of an imaginary number anyway. We all know that Jakarta, 20 million consumers, Gojek at most 20 million users. So your markets are really small. So question is, how do you defend against that line of attack? How do you make your argument for you actually serving a very large market? I don't think everybody needs to answer, but those of you who have been on the receiving end of this attack, you go first. You actually have a super niche, super focused business. I'm sure you suffer from this a lot. How do you defend?
Well, my customers serve that 280 million people. And this is a sad statistic. So we've always thought that, the narrative is middle class, growing, more affluent. People are going to stop buying at the warungs, they're going to buy at the supermarkets, at the modern convenience stores. Sadly, the trend is reverse. People are getting poorer, they're dropping out of the modern trade into the traditional trade. So the traditional trade may be offline, but it doesn't mean you can't use AI analytics and a whole lot of online. It's a hybrid. So long as you can reach that massive market that's offline and traditional, but you find the technology elsewhere, in our case for risk management and fraud detection, that's where we get our market. So I disagree that it's small, it's big.
Interesting. So you're constructing an argument that overall Indonesian population is getting poorer, and that's why your market is getting larger. And it actually works.
Sadly, yes. Sadly.
Has anybody else faced an investor like that, saying, no, guys, stop talking to me about large TAM?
I mean, I think in the wealth business, India similarly faced many, many years where there was a lot of skepticism around the size of the wealth market there, right? And then when it turns, it turns. So I think at the end of the day, I have to say I'm very happy with Pluang's revenue. I'm very happy in the progress we've made. I think at the end of the day, there are massive family businesses in Indonesia who obviously have been around for decades, right? And so I think fundamentally, as an Indonesian, frankly, as an Indonesian, I will be here till the day I die, and I will continue to invest in Indonesia. I will be around. It doesn't matter, right? So I think a lot of investors, when they come in, they behave a little bit like a tourist. They're like, you know what? I'm gonna invest. Is the market big enough? If not, I'm just gonna go. Well, okay, it's fine. I'm gonna be here. Everyone else is gonna be here, and everybody who believes in the country will be here. And I think one day, if it's not today or tomorrow, the country will get big enough, right? It's just only a matter of time where there's going to be enough people in the middle class, in the high end of the market that will get there. And I think that's where the tip of the market is. And maybe just in the wealth business, I'm not sure how familiar you guys are, derivatives just got approved in the last quarter. So this product has has just been launched in our platform. Some of our competitors are just about to launch it. So let's see where it goes. But that's actually what happened in India, right? When it turns, it turns. So hopefully we'll see that as well here.
Can I? Sorry, go for it. Thank you for giving the India example. I didn't want to be the Indian on stage giving India example, right? But you're right. And I think, again, sorry to answer it at a fundamental level, but I think investors, like all humans, try to reduce a problem to a level that they can understand. That doesn't take away the complexity of the problem itself. Indonesia, as like other markets, is a complex market. You can look at per capita, you can look at disposable income, but all those are like levers that affect, right? In India, for example, people say that demonetization caused this whole bang of fintechs and digital money growing. Sure, but cash is back to the same level that is. But these companies have grown massively. There have been fundamental changes like Soundbox, etc., which has not happened in Indonesia, which has changed fundamental merchant behavior. So I don't think there are specific instances. As Claudia said, this is a macro and a complex problem. We cannot reduce it to the level of saying Indonesia is a small market or a big market, because there will be niches in which companies are growing and will continue to grow. As she was saying, family businesses have grown well. So was the case in India. In fact, I was just thinking about the last panel about the lack of exit options, right? 3 years ago, this was the same panel in India talking about lack of exit options, if for those of you who are from India and investors, right? Today, most Indian companies have given fantastic exits to, most IPOs have been successful, even if their price has fallen to lesser, but have given exits to their investors. So I think macros are difficult to understand, which is why people like VCs make money. But that doesn't necessarily take away the fact that the market is existing and the economy is not strong enough.
Fair enough. With one caveat that I do recall a panel here 3 years ago that was talking about exit struggles, and I think the answer was that IDX will save us all. Moving on swiftly, so I would suggest that probably not every operator in the market is as beautifully disciplined and monetization focused as my panelists. So I'm pretty sure that at some point of time, you would encounter a direct competitor who would want to boost their growth rate by using the magic power of fintech, which is that all of your businesses effectively are in the business of providing money, and money is a very useful product and it's easy to give away. So let's talk a little bit about temptations of rebates, incentives, and buying growth. Is that still a thing in Indonesia, and does any one of your companies still practice this dark art? Don't all speak at once.
Yeah, we don't really see that, to be completely honest. Because I think for us, the credit card penetration is extremely low. So it's really just a supply market. So if we go out and we find the right customer and we offer them the right product, we don't really pay a lot of CAC to get them. And currently there's not so many competitors in the market either. So we don't really face that issue per se. But yeah, very happy to hear your thoughts from the other panelists as well.
Can I give a cautionary tale about incentives?
Now we're talking.
All right. So I talk to my customers, wholesalers, suppliers, and sometimes I like to ask, oh, so how did you start this business? There was this one lady in Malang, which is near the second largest city, Surabaya. Her wholesaling business, I think, does around $200,000 of monthly sales. And she said, oh, I was a voucher jockey before I started this. I've never heard of the term before. It's like, what is a voucher jockey? Oh, you monetize all the coupons, cashbacks, and incentives from all the various apps. And I said, that's how you built this business? Yeah, it gave me the initial capital to buy a truck, to get the inventory, and get things running. So I just said, this is $100,000. Like, how did you do it? And she said, okay, you can route an Android phone to take 100 IMEIs. So it can support 100 phone numbers and essentially 100 accounts. And it says from morning to night, if you're just working these accounts, you can probably handle 10 phones. So that's 1,000 accounts per human being. And so she would go to some retailer and buy. Because with cashback, sometimes you get 50% cashback, but only for micro-transactions. So she'll use her 1,000 accounts to buy 1,000 bottles of this, buy used carton, aqua cartons for 5 cents each, and she'll pack 24 bottles per carton, tape it up again. She now has a wholesale SKU unit that she's acquired at 50% of recommended retail price. That's cheaper than the wholesale price. It's cheaper than the factory price. And she would send that back up into the supply chain through traders. The insanity of something going from a factory to a distributor and on a truck to a retailer, onto a shelf, and then repacked again and sent back up again, blew me away. And I just said, oh my God, are you still doing this? It says, oh God, I don't have the time now, I'm running my business. But I've got my whole street doing it now. And I just went, wow, okay, so that's where the money went.
Yeah, $10 billion of VC capital later.
Trickle down.
So we did build the GDP, hey? No, this is really evil to disclose the template to the rest of the street. That's just propagation. Yeah, we used to do that to Redmart in Singapore a lot. My old colleague is here. We've been practicing. But am I to understand that you don't approve of using incentives in the pursuit of growth?
Well, if it creates more suppliers for me to be my customers, I'm all for it. It's crazy. And it happens at the wholesale level as well. Like literally trucks going in and out. Similar concept. It's bad.
Does anyone else on the panel have an amusing anecdote or two about incentives going absolutely right?
No, I don't have an anecdote, but to reiterate, guilty as charged, because some of my past roles, didn't even think about CAC. It was like, okay, fine, just whatever, 5 million, just go spend it, right? It was criminal the way that we spend money, but that's in retrospect. We learned a lot in terms of how not to spend money at the cost of somebody else's money. But today, I don't think, not only us, none of our, being a consumer company, I can empathize, but today it's very, very clear about how much time do you take to recover from your ARPU of the user. And if it is less than a year, for us at least, because in payments our margins are not as good as crypto. But if it is less than a year, great. If it is more than a year, sorry, let's talk about it once you're, But I think that prudence has come in for good.
Claudia, crypto world, incentives, come on.
No, I think I don't have an anecdote per se, but obviously in the early days, I think everybody was subsidizing. Everybody was, can you imagine selling crypto or whatever stocks at below the price and giving it out for free? It's actually pretty crazy. At one point it was like that. But now, it's not like that. And that's actually how companies thrive, right? Back in the day, I think we were struggling because it was so hard to compete with people who were doing those things, right? So I think at the end of the day, for the companies that do survive, I think we just have investors hopefully will understand that businesses aren't always like this. It doesn't go 10x every year, but at the end of the day, you grow steadily, you survive through the winters, and you'll get there one of these days, right?
Which brings us smoothly to the topic of managing stakeholders. So we've been discussing this before the panel, and I think the two topics came up that were orthogonal to each other. Well, the two sides of the same coin, really. One is, how do you persuade your stakeholders to let you slow down a little bit on the growth to build the necessary engine for monetization? And then there is the converse of that, which is once they get addicted to profitability, how do you persuade them to release the iron fist and let you invest into growth while the competitors are running for the hills? So any fun stories about stakeholder management?
I think we are actually pretty lucky on this one. So one, I think we have pretty patient shareholders. So that actually helps a lot. And the other thing which is very lucky for us as well is we have a very good example, which I mentioned earlier, is Nubank. So oftentimes when we see investors, they wanted us to be more monetization at an early stage. We can just say, okay, when we benchmark to Nubank, this is what they did, right? They put in the time to really lay in the foundation. And even before they went on IPO, they're still like burning some money. But you see what they are right now, right? So these good examples for us really helping us to explain what's going to happen if we really lay the foundation at an early stage and what will be us become right later on. So I think this really helped us. Yeah.
So use reference template and say this is how it worked in Brazil.
Yeah.
Leave us alone.
Yeah.
What about winning the opposite of this, which is stay profitable, and you actually want to argue for growth?
I actually do think profitable is pretty important. So I think as a entrepreneur, we always have to balance growth and profitability. So for us, we do think about this all the time. So we are not really telling our shareholders, okay, so we are not going to be profitable within like 2 to 3 years or even 5 years down the road. We are actually trying to be growth, but at the same time, trying to be profitable as soon as possible.
But what if you have both in your board? Somebody who is still into this whole growth thing, because we need to build momentum for the next round, and then somebody who doesn't want to be fired from the VC firm, so they really insist on profitability to be maintained. How do you balance that?
I think our shareholders actually wants both. I know it's
that's just unreasonable.
I know nowadays every investors are asking for that, but yeah, they want it for both. So I guess for us, we, as I mentioned earlier, so we're really trying to grow, but at the same time to be profitable.
How do you deal with yours?
Sure. So I feel your cap table reflects your philosophy and vision. So AwanTunai has a fairly unusual cap table. It's filled with bank CVCs and DFIs, including the World Bank's IFC. So fairly conservatively minded folks, but folks who actually understand lending. And so whilst I've had other co-founders in other fintechs who've been whipped, we just disperse at very unhealthy and dangerous levels, I've never come under that particular pressure. All my board members have simply said, build a sustainable business. And it also helped that I made sure that there weren't too many board members. I've heard horror stories of in excess of 10 board members, and then that gets really messy and unpleasant.
Can I please steal that quote from you? Your cap table is your destiny. I think that's going to be pretty good. Yeah, there could be an additional question of how you keep number of board members under control, but first, maybe you wouldn't want to comment on stakeholder management?
No, I mean, I think in our case also we are quite lucky to have board members who are, who understand, at least now it's not the time for breakneck growth. But, a lot of it is also around asking the right questions, which is, what do you really care about, right? I heard questions like growth, etc., right? But I told no. What we really care about is how much money do we make per user, and that will drive everything else, right? Hence, coming back to product-led growth and more fundamentals in terms of, are we doing this? So I actually removed our MTUs and number of merchants, but I put total revenue and revenue per merchant, revenue per user. Because as long as that is growing, don't complain, right? And the gap between profit, or the gap between gross margin and profitability, right? And that's it. I said that as long as this gap is narrowing and this is growing, you don't really care about number of users. That's a vanity metric. It's okay if we have 1/5, we're monetizing 4 times than the larger user. That's the way that I justify it.
So I have something to ask Dino, but before I get there, because it's very, very specific to AwanTunai, you guys all know each other pretty well by now. Any questions to each other? Any items of curiosity? I thought some were volunteered, but while you're thinking, I have to ask you this. I I know that you've explained the workings of the business and how you think about that, but you are standing tall, one of very few remaining in a complete field of carnage that has been Indonesian peer-to-peer, especially in SME lending. How?
It's a valid question. I mean, it's the white elephant in the room. It's a train wreck at so many different levels. In some ways, AwanTunai has been preparing for this for a long time. Like, we saw it in China, right? High interest lending doesn't last. So we've always tried to figure out how do you do low interest lending, and for that you need to get low NPLs. You need to really get that risk innovation. And in some ways, we fully focus on that, and pretty much nearly every dollar that we raise was put into investment or infrastructure. And when I say investment in terms of IP investment, all fintechs talk about AI. The reality is you're using some vendor out of China or India. Who actually builds their own models here? Who actually owns the real IP? How many patents are filed out of this country? I was shocked when I talked to our US patent lawyer. I can't mention names, but okay, this was a decacorn. How many patents have they filed? 3. I was gobsmacked. Where just that, the Apple Vision Pro, that thing had 5,000 patents attached to it. You file families of patents. So there's no real tech that's really been developed. And I think you need that type of investment for a sustainable difference. Otherwise, you're just doing exactly the same thing as a bank with higher cost of funds, and well, that doesn't work.
I would add that you've pretty much built yourself a synthetic credit bureau just for yourself, which is pretty damn impressive. I see a couple of questions from the audience on the criteria that investors prioritize when evaluating fintech startups. I would skip the question because I don't have any investors on the panel, although there are a couple of recovering ones from the previous days. And then we've pretty much addressed the question of fintech companies' monetization. So I'd say probably let's just say thank you, guys, give you a round of applause, and let everybody go for the drinks. Thank you all. Fantastic summit, Georgie. Congratulations on 10 years.
Thank you so much to our wonderful panelists for that exciting closing session. A really candid, frank discussion. Really engaging stuff. And of course, want to capture everybody at your best. So can I just get everybody to step in front of the tables? That's right. The camera is right over there. All right. Wow. Cool. Big smiles to the camera. One more. And we got it. Cool. All right. Thank you so much. And of course, I believe we have come to the end of a very productive day. We hope you found all the panels insightful and packed with great takeaways for you to take home and reflect on. Now, before we wrap up, just want to remind everybody to mark your calendars, because the next edition of the PEVC Summit will take place in Singapore this year on September 10th and 11th. That's right, September 10th and 11th. Make sure you mark your calendars for the PEVC Summit happening in Singapore. Just like last year, this will be a 2-day event featuring 4 dynamic tracks. Now, for more details and to grab early bird tickets, visit the Deal Street Asia booth at the foyer. You can also scan the QR codes on the promotional banners placed around the networking area. Now, the stage program has ended, but you don't have to leave because there are cocktails just outside. And of course, join us to celebrate Deal Street Asia's 10th anniversary. Once again, my name is Wayne Chan. Cheers and happy networking.